Yo, what's up, guys? It's Trader X again out in Soweto. So welcome to it. Welcome to it. Yeah. So we're going through some of the trades that I actually took in the past week, right? The reason I'm doing this is yes, you've requested this. A lot of you guys have requested that I show you some more examples as we move along. Now we're looking at my demo chart at my demo account right now, right? But yeah, all of the trades that I'm going to show you now I actually did take on in the previous week, and I have one more that is still open right now. I took two were filled yesterday, and we're looking at the pound dollar, right? So two were filled yesterday on the pound dollar, and I'm holding one position. Hopefully it will, I don't know, but we'll see what happens to that particular position. But I'll show you where I'm expecting price to actually go. Hopefully it does. But in any case, let's go through all of these trades here so I can bake in the whole idea of this particular system, and you can trade it on your own. All right, so we're looking at, this is the 18th of March, which is last week Thursday, right? So last week Thursday, we had a transition happen. Again, guys, remember it's critical that you wait for market open. And what I mean by market open is between the Euro session and the end of the US session. So the open of the Euro session until the end of the US session, that's where you predominantly want to be operating, right? Because what I found is it gives you a whole lot more setups. Actually, not a whole lot more, but setups tend to happen between those particular times, and it's like a filter of some sorts. If you think about it, it's like a filter to prevent you from just jumping in willy-nilly before market open, because we all know that the Asian session has a tendency of doing of just giving you wrong information most of the time, right? But so like I said, it's critical, guys, that you wait for market open, Euro session, Euro open until the end of the US session, right? So in any case, what happened here is, again, I took note of my previous day's high, which is right here below the low, below the X rather. My previous day's high. Remember, again, guys, we were in an uptrend, and remember what I mentioned to you in the previous videos. In an uptrend, you want to see what happens to the previous day's high, right? Because predominantly that's where price fails to break. If it does, if it breaks the high in an uptrend, then you know that liquidity is still in the market, so prices could possibly continue higher, but you have to wait for certain things to actually happen. And again, so in this case, price failed to break, right? Now, just to get this out the way real quick. Now, this impulse move here, and I feel like a lot of you will be looking at it. This impulse move here, you're right in thinking that, this impulse move is going to continue higher. Don't look, guys. All you can do is trade the system, because I found that a lot of you guys do not allow yourselves to lose trades. You will lose trades. Now, the sooner you get that into your mind, the better. The sooner you can deal with that, right? The better, because it will happen. So don't be discouraged whenever you lose trades or you don't take the profit that you want, right? Or price goes in the opposite direction that you were hoping for. Just don't lose. Just keep your eyes on the price, guys. Is literally what I'm trying to point out. Trade the system. That's all we can do. All you can do as a trader, technical trader, is just trade the system. And that's it, and control your risk essentially. But in any case, you would be right in thinking that this was going to cause a continuation, this impulse move here. So therefore, I too had 3 trades filled here. I too had my fib anchored here, and I was hoping to take profit right at the zero. But as you can see, price failed to do that, right? It went all the way down, taking my break even as well along with it, right? So my break even, remember, guys, at the 62.70 and the 79. So when it came back down, yeah, it just took my stops along with it, right? And that's okay. Remember, again, guys, it's better to lose or rather, it's better to break even than to lose money, right? So make sure that you at least break even, because losing money should not be one of those things, right? But in any case, that's what happened here. So you wouldn't be wrong in thinking that this was going to cause a continuation, right? The only time that we would have been sure that price is actually moving in the opposite direction, or this is a transition, is when this impulse move happens. Because if you look to the left again, it takes up previous price structure in the short term, basically meaning on the 15-minute chart, and that leaves no doubt in our minds, or my mind, that price is actually ready to move in the opposite direction, right? So in this case, what I did was slept on my fib all the way to here. Actually, Let's start here. So I slept on my fib here. Price did not go up to fill my orders, right? And then we got this little test here happen to my fib, but it didn't break it. This is subsequently the low of the previous day, right? The following day, we had price have a nice interaction here at the low of the previous day and then move all the way higher, right? Extended my fib, moved it all the way here. Yeah, and one of my trades actually was filled here at the 62. One of the trades was filled at the 62, but let's just suppose you missed that one, right? Let's just suppose you missed that one. This impulse move did the same thing here. This impulse move from up here all the way to down there, right? Did the same thing again. The following day, guys, you want to take note of what happens to the previous day's low. Right now, this is the safest, one of the safest ways to actually trade this particular system, and then I'll show you again what I mean by that, right? I'll show you what I mean by that. But in any case, this is the safest way. You want to see price break the previous day's low because we are in a downtrend, and you want to see a nice impulse move, or you want to see price print lower lows and lower highs in respect of the 15-minute chart or the short-term time frame, right? Or short-term price structure, really, not short-term price time frame, but short-term price structure. So you want to see short-term price structure breaks happen beyond the previous day's low, and like I said, that is the safest way of actually doing it. And then you want to jump in. So in this case, price gave us a beautiful break here to the downside, beautiful break to the downside, with a nice impulse move to the downside. Again, all I did there was I took out my fib, slept it on, and again my 62 was actually filled to the downside, took profit on that. Right now, if you're wondering why I have this red box here, the reason I have this red box here, guys, is just so that I can be visually reminded that we are in the grand scheme of things, right? Visually reminded that we are in a downtrend. This is where the transition happens, which literally tells me that price is ready to move in the opposite direction, right? So liquidity has run out to the upside. The only way price, or the only direction the price could possibly go, is downwards. So when I scroll back and I see that we haven't been in a transition to the high side, and I scroll back and I see that we are either at a red box or a green box, then I know that I have to be bullish or bearish. So in this case, when I glance at it, I know that I'm bearish the pound dollar at that particular time that I'm observing price, right? Fantastic. So I suggest that you also do this, employ this. It will make things a little bit more easier rather than just having lines on there, right? So just put, I don't know, anything that's going to be visual. It could be words, whatever really. Just put it on there, and we'll at least kind of let you know that we are at the, like I said, in the grand scheme of things, on the bigger time frame sense, that we are in a downtrend. So that's the reason why I have that. Anyway, so my price was filled again the following day. Take note of a previous day's low projected onto the right hand side, and this is what I meant by, sometimes price, and I don't know if I've explained this to you guys, right? Sometimes price will do something different, and sometimes it won't move beyond the previous day's low for you to be able to jump in. Now remember, that's one of the things that I mentioned to you guys, or one of the rules, if you will, that I mentioned to you guys, that you need to wait for price to make moves beyond the previous day's low in the event of a downtrend, and wait for price to give you price structure breaks in the short term, and that's the only time that you're going to jump in, right? Remember, I'd mentioned that. So if that's the case, right, if you were waiting for price to break below here, then this means on this particular day here, you wouldn't have had any trades, which I did. You wouldn't have had any trades open, right, or any trade filled, right? So you would have skipped this particular day because price doesn't make a move beyond the previous day's low, as well as print lower lows and lower highs. So what you would have done was you would have been waiting for the following day, which is this day, and this is the only time that below the X, right, the day with the X here, the moving X, that's the only time that you were going to have price structure breaks in the short term, and therefore allowing you to jump in, right? But like I said, this is one of those things that I just did not explain to you guys, and I feel like I should be touching on it again here. So what happened here, I had a trade, by the way. I had a trade here on this particular day with the X with the box. Let me remove this X here. But anyway, I had a trade there, and I know price did not move beyond the previous day's low. But so here's what happened here, right? Market open was round about, where's 9 o'clock? Market open, when time saver now, guys. So market open was round about here, at my crosshairs with the vertical line, right? That's where market open was. And again, so when I looked at what price was actually doing, and again, you wouldn't be wrong in thinking this, guys, right? You wouldn't be wrong in thinking that when you saw this happen, when you saw price have a rejection of the previous day's low and move within the previous day's range, right? You wouldn't have been wrong in thinking that this is a transition to the high side. This is where your thinking is you're going to have to be proactive with your thinking and with your analysis looking at price structure, right? Because you wouldn't have been wrong in thinking that this is a transition to the high side. Not only that, you can clearly see that price is clearly giving you price structure breaks here to the high side. And this is before market open. Market open, remember, was run about here, right? It was my 9 o'clock, was run about here. Market open. Now after market open, we had an impulse move to the high side, which is this one here. And as you can see, like I said, it breaks previous price structure in the short term, meaning on this particular time frame that we're looking at, it breaks previous price structure. So you wouldn't have been wrong in thinking that from here to up here, that's where your trade is going to be. Now let me remove these real quick here. So you wouldn't have been wrong in thinking that this impulse move here from down there to here is a trade. Yes, you would have been filled and you would have taken profit right at your zero, right? It's a small move, but let's see how many points that would have been. What I'm literally trying to point out, guys, is you wouldn't have been wrong at all. That's 23 points, so it's worth it, right? So it's 23 points between 62 and 0, so it is actually worth it. Anything above 20 points or 20 pips you can actually take. So you wouldn't have been wrong in thinking that this is a transition, right? If you are like me and you took profit on 2 of your trades at the 0, 1 of your trades would have broken even when price fell here, right? Like I said, this is where you need to be proactive with your thinking, right? Because now look, if you, again, I'm going to extend the previous day's low to this particular day here. We can clearly see, like I said, this would have said to you, this move here would have said to you that we possibly in a transition to the high side. It's not until this move popped up here that it invalidated everything. And if you take a look again to your left, thanks to that red square or that red box there, you would have known that we're still in a downtrend, right? So when this move or when this impulse move popped up, it would have again said to you, a continuation is possibly on the horizon, right? Price is possibly going to still continue on down. But when this move popped up, look what happened. It took out the previous price structure here to the left. We can clearly see these 2 highs here that were taken out by this move here. So therefore, you could have slept on your fib here, which I did. Slept on your fib here. All 3 of my trades were actually filled, and down she went. So what I'm literally trying to point out to you guys is, it's not always necessary for price to move beyond the previous day's low. But again, this is the safest way for you to trade this particular system, right? It's safe. So I would stress that if you're a beginner, or if you're not up to speed with this here particular system, rather wait for price to move beyond the previous day's low and then jump in, right? So this would have meant that this whole day here, you would have missed, because price did not make any moves beyond the previous day's low and print lower lows and lower highs as it continued the trend itself, right? But like I said, I jumped in on this particular trade here. All 3 of my trades were actually filled here. I got out at the 0. 2 of my trades took profit at the 0, and I let 1 run, right? Again, the same thing happens the following day. Market open, what you do is, or when you get into your office, just make sure it's before market open. Extend or find your previous day's low and project it onto the right hand side. Again, here's the safest way to actually do it. So you can clearly see we had this beautiful break here happen. Where is it? Had this beautiful break here happen. Not only that, we had this impulse move happen again, and bam, Bob's your uncle. 2 of my trades were actually filled here. It didn't go for 79. 79 was not filled, but anyway, 2 of them were filled, took profit at the 0 and let 1 run. But in any case, this is the safest way to do it, guys. You wait for price to move beyond the previous day's low and wait to see a sequence of lower lows and lower highs. And it's the same with an uptrend, right? You wait for price to break the high, and you want to see a sequence of higher highs and higher lows happen beyond the previous day's high or the previous day's low, and then you can, and only then can you jump in. That is the safest way you can actually trade this here particular system, right? Because I know a lot of people would have not realized that this move here signals a continuation to the downside, and unfortunately it does actually happen, right? We hold on to the fact that this has just shown me that this move here, or what just happened here, is possibly signaling to a transition to the high side. So therefore, yeah, we forget. I don't know how that works, but it's a mental thing, bro. Once you hold on to a belief, especially in trading, once you hold on to a belief that price is going to do something and it goes against you, you still hold on to that particular belief. And it's a phenomenon that always happens. And yeah, you know what I'm talking about. If you don't, you got a lot of work to do. But in any case, this is the safest way to do it. So I jumped in here, and this was, when was this? This was Wednesday, Thursday. Yeah, no, this was Tuesday actually. Tuesday I jumped in, Tuesday the 23rd, jumped in there, and then finally again this happened here. Now, again, or rather, before I do that, again, what you want to do is take your previous day's low, project it onto the right hand side, and that's just about it, right? So all you have to do now is just wait to see what happens beyond the low. So in this case, there was a trade. I don't know if this one was filled, but I didn't take these trades here. Yeah, it would have been filled here, but I didn't take this particular move here with the red box. So it would have filled your 62 and down she went, but like I said, I didn't. Was it even worth it? Let's see how many points this was. Okay, it's not going to be accurate, so about 18. Yeah, so it wasn't really worth it. This one here wasn't really worth it. Now again, guys, now let me just, I want to remove these here real quick again, guys. So when this happens, because I noticed that a lot of you guys actually do this, once you see price move beyond the low and you see this nice big impulse move to the high side, breaking price structure to the left hand side, a lot of you have the tendency of assuming that this is a change in direction, possibly a change in direction. Guys, again, it's not, right? As long as price is below the previous day's low, right? And we're observing this day. Remember, when we're observing this day here with the X, there's no way for us to know where the high of this particular day is going to be, or the low is going to be. The only time we can actually tell is after the day has come to an end. Does that make sense? So the only low and high that we can go off of is the previous day's low and the previous day's high. Now let me just show you what I'm talking about here. So here is the previous day's high. These are the only two resistance levels that we would have known about looking at this particular day with the X. Because this day is still in progress, there's no way for us to tell whether this down here with the horizontal line is going to be the low of the day, because for all we know, price could just go all the way higher, taking out the previous day's low, and for some odd reason go all the way down, taking out this low here with the horizontal line, gray line. You know what I mean? So never assume anything. Wait for that day to come to an end before you can make any decisions based on how you're going to be trading on the day that you're observing. So like I said, a lot of you guys that I've noticed have a tendency of doing this. You see price move beyond the previous day's low, right? And you see this move happen here and automatically assume that this could possibly be a change in direction. Firstly, guys, like I said, price is moving beyond the previous day's low, right? So this totally invalidates the fact that this is a possible, let me make it thicker, this is a possible change in direction move because it is below the low. Does that make sense? So even though it breaks previous price structure in the short term here, it doesn't go for any other one, but here it still does not qualify this impulse move as a change in direction move. So one of you guys sent me a screenshot of this particular trade here, and we're like, okay, I'm going to be buying here. Come on, look, like I said, beyond the low, it's really not worth it. And again, your stop would have been hit right down here. Then what? You know what I mean? Yes, it would have worked out possibly here. You could have possibly been filled. I'm not quite too sure, but I don't think spread would have denied you here. But spread would have denied you here at the 62. But rather, this is one of the riskiest ways of actually doing it. Wait for price to show you what it wants to do before you can jump in, guys. Now I want to do this. Where is? Here you go. So I want to do this here real quick. Oh no, let me lock these. There you go. All right. So again, the only time that we would have known that this is the low of this particular day, this low here is the low of this particular day, is once price or once the day ends. And the day ends here, 11 o'clock on my side of the pond. That's it. Well, I know it says 12 o'clock here, but anyway, midnight. But anyway, 11 o'clock, this is when I know that, the day is over with. It's really that simple, guys. There's no need for you to complicate this. But in any case, so this is what happened here. Came into the office and I noticed this low here, projected it to the right hand side. Price failed to break here. We can clearly see this. Price failed to move beyond the previous day's low. And then guess what? Started printing higher highs and higher lows. But it was this move here, which is the one that I'm currently in, this move here, that let me know that price is ready to move in the opposite direction. So let's remove that. So this is the current trade that I'm in right now. This impulse move here. Again, you look to the left, it breaks price structure, it breaks this high here, and then it breaks this high here. Again, it's a no-brainer. All you had to do there was slap on your fib. Two of my trades were filled here. One took profit at the 0, and I'm still holding on to one. And we're like, what, 45 minutes away from market open now. You know what I mean? So all you have to do, guys, is just wait to see what happens to the this is a transition, by the way. A transition happened yesterday, and we got an impulse move literally confirming that transition happening here below the arrow. And like I said, slept on my fib. I took profit at the 0. One of my trades is actually still running. And that's just about it. So that's what you hold on to. Now, this particular trade, if you're wondering, this one trade that I'm holding on to where I'm going to be taking profit, right? This is the one at 70 is the one that is still running. Now, if you go to your daily chart, again, all you have to do, let me remove everything. All you have to do here is just wait to see what happens to look price structure again. Now, the daily chart, bear in mind, guys, the daily chart between these periods, this is a whole month, right? So between here and here is a whole month, right? So the same thing is applicable for those who want to be swing traders. Use the system as for swing trading. You can actually do that. So this high here is the previous month's high. This low here is the previous month's low. Now again, we can clearly see that price failed to go after the previous month's high and therefore started printing. Well, it actually started here. This is the first. Okay, so let's just do this. It started printing lower lows and lower highs, right? So this would have been from here all the way up here to here. This would have been a higher low, right? And then it went up there. It was on its way. It was supposed to be on its way to print a higher high, breaking the previous swing, right? But it didn't. It came short, and that literally just confirmed the fact that we are in a downtrend. So this is the first lower low that price printed after this big uptrend, right? So if, again, you look to the left, we've been in a big uptrend. This is the first lower low that price actually prints, right? Again, where my target is going to be, same thing is applicable. Swing high all the way to swing low, right? So remember, I got in on this particular day here with the arrow, this day here with the arrow, and I'm holding on to it. So I'm going to be holding on to this particular trade. Hopefully it gets up all the way to in this hot zone here between the 62 and 79, but if it doesn't, that's okay. But yeah, that's my overall target to the high side. So I'm hoping the price comes in here, gives us something to the downside, and then we hold that. I'll hold that knowing that it could possibly come all the way past this low here. But for now, we are in an uptrend in the short term. scheme of things, right? So in the 15-minute chart, we are in an uptrend until we get to the daily hot zone, which is right up here, right? So at the 62, I'm going to be considering taking my profit. But if everything goes pear-shaped, my plans go pear-shaped, that's okay. If it goes pear-shaped, my stop is at the zero right up here. My stop is at the zero right up here. So I will be getting out if price decides to, retrace back for whatever reason. I'm still getting out with a profit, but I'm at least hoping that price actually goes up all the way to this particular X here. All right. So again, same thing. Now, for those of you guys that want to swing trade this particular system, leave a comment below this particular video here, or leave a comment below, and yeah, I'll see if it's going to be worth it for me to even touch on it. But it's literally the same thing. Right. Yeah, so that's it, guys. It's been 25 minutes. Oh my gosh, it's been 25 minutes. Anyway, thanks once again for your time. I hope you learned something. See you in the next one. I'm out.